That should be ready. Let's see. I'm going to mute for a few minutes, but I'm going to open it up. But anyway, thanks for coming on Saturday morning. Good morning, and or good afternoon or good evening, whenever you do come, as this is being recorded. And this is for analysis and educational purposes only, as you know. And we're glad you came. So anyway, the markets, the world events are, needless to say, are starting to get a little dangerous here. Perhaps if we look at the E-mini here, well, actually that's Google. Let's see. Let's look at the E-mini. Let's see. There's the E-mini. So there's the E-mini on the daily bar chart. We see this is Friday yesterday. This is a sell signal here for sure. No question about that. The bar closed on the lower end right here, like towards the lower end. A lot of selling off. Look how it went right to this, almost to this Fibonacci point of a 38.2% retracement on the daily to 2822.523. Just went right above here. And who says Fibonacci doesn't matter, huh? So anyway, we've heard people make fun of it throughout the years. Fibonacci. It's kind of hysterical that they don't realize the significance of it. But nevertheless, it went almost to this point, and I would say that it closed right here at 2835.72. If the E-mini breaks 2825, let's say if it breaks this bar here, to be real conservative, 22.523, it could head to 2796 and on to 2770. It could, certainly head down below in here, and then, easily head to this area right here too. And this is, looking at the E-mini with these Fibonacci points, I want to say, we started back here, November 9th of 2016, and we extended the bar all the way up into here to the high. As you can see, we're almost back near the highs here. So it's certainly, it's looking a little eerily similar to this. Remember this bar here? And then we have this bar, which was really a signal. And so here we've got this one bar here, that's come down here. So only above, I would say, to get out of the woods here, we've got to get above 2845. We've got to get above this area again. It's got to get back up here again. Maybe it'll take these hedges off of Google and Amazon and, the two kings, and let this index come back up again here. But I would say we've got to get above 2845 to do so, and I would be long above 2844 and short below 2835, on Monday. So let's see. So I wanted to see if I can do this. Actually get the VIX on this, but I want to look at the VIX, now. So good. The VIX, here's the VIX, and the VIX closed at 1302, 1316. We had a spike in the VIX yesterday. This is a nice VIX chart, isn't it? And this is on the daily. So there was a spike in the VIX, and went to 1313 actually, 1316, 13.16. So we don't want to get this, we don't want to see this, getting above this point here, 1366. It makes it more difficult, as you know, for options trades. If it gets, if it got above 14, it's getting, it could, let's face it, head back to 16 and 18, etc. So that would not be good. So and I wanted to see if I can actually get the bonds in here. Maybe I can, or else I'm going to have to go over to Thinkorswim. Let's see. No. Let's see. I didn't give it to me this way. Let's see. Now that's the yield yesterday, 10-year bond yield, but that's an inverse relationship. We don't want that. Let's see. We'll go back over to here to, let's see if I can get that. Hopefully I can. Let's see. Yes, I can. So here we are with the 10-year. Maximize the sell here. It closed at 120.75. The bonds had a huge up day on Friday and went to the 120.70 area, and now they could spike even higher. We could see them spike into this 120.255 area without question. They had I want to say a foldback, similarly back into early June here. It looked like this. So now that we've headed here and headed here, this looks like this area. We could be heading back up just like this area. The major foldback, just like this area right here, right there. So, that's the story with the bonds. So, could continue to head higher for sure. Now the U.S. dollar yesterday had a huge breakout on Friday. Closed at 90, the high was 96.42, closed at 96.266. And I think this could be certainly be heading to 98, and if not 98, also 101, even higher. With all these currency issues, if you will. So, and gold. Looking at gold for a second here. Let's see. Gold's just, held up a little bit on the war news, basic war news, but it seems to be the case that Russia and Iran are likely selling. So we need to see some upside in here. So it's just waffling or, just hanging out here. And let's see, on oil, I want to look at oil. Oil has resistance around 68. There's resistance in here from this, see these bars over here? This could be seen as a 1, 2, 3, 4, 5 right down, extended fifth wave down. But oil has resistance at 68 or 68.50, I would say 68. 68.50 in here, and oil will likely see more Russian selling, moving forward. So, that's the story with that. So, on the we're going to go back over to, let's look at the NASDAQ. The NASDAQ, looking at the 4-hour. Certainly did see some significant selling due to the mighty Amazon and Google selling off as they led the NASDAQ down. So let's go back and let's look at those. Let's look at this chart. So we'll look at Amazon. There's Amazon with Fibonacci points from a year ago. About a year ago. So you can see in here that there's this red bar in here. There was a spike above this. I'm not going to count that in the Fibonacci analysis because it was just a spike above it. But There's a spike above it. And it looks like it closed at 1800.88. And, you know, it led down yesterday. This could be a sell signal or a significant, even a significant sell signal right in here. So caution, you know, there's, you know, a lot of reason to be cautious in here, right in here. This could keep selling down on Amazon. So, you know, there's this, if you take, what I did is I drew Fibonacci points from here to here, and then from here to here, to zero in on this area. You see the way this is right here, this 0.382 is right around in here, which is at 1754.004. So technically, this could keep selling down. You know, we're going to get this real support area right in here. And if I wanted to draw it again, well, I could, and I'll just start from here to there, and then, you know, see it in a deeper level of support right here at 1838.23. So you see how this area right here is like that, and then this area right here is like this, and this is on the daily. So 1838.23, you know, Amazon, you know, could really find some immediate support, and then major, you know, more of immediate support kind of on the major side at 1754. So this area, yeah, this could be seen as a, from this area, to 1, 2, 3, 4, 5, in terms of Elliott wave analysis, with a more of a simple pullback on 2, and on 4 of a more complex, you know, A, B, C, which is very normal in terms of Elliott wave. So we have a simple 2 pullback, and then a more complex 4 pullback. And this is the major stock to watch, right? So you have to be aware, it's very important to be aware of these levels and what's going on here. So it could be starting a major ABC correction. You know, the fangs were up. It's been a fairly choppy market. I feel that that is certainly a fair statement. And the fangs have been in the major bullish area, if you will. But, you know, let's face it, if they head down, they all may run for cover. You know, so let's look at Google. Here's Google. Google really had a, look at that, that's looking much more bearish, if you will, right in here. Just dropped off here and closed at 1,238.59. There's major, let's face it, there's major support here at 1218.76 right in here. And it's pretty choppy on the way up here, for sure. You know, it's, that's the daily. So, you know, it's got as high as here, 1268.46, sold off hard here, and it looks like it could be heading down again, you know, easily. Needless to say, right, this 38.2% retracement to 1218.76, right in here. And this is a Fibonacci, this is, you know, from, I want to say, from September 22, 17, right in here. I drew these points from here to here, and then do them again right in there. If I did it again, well, it doesn't make it really, it doesn't make a lot of sense to draw them again. But I could, and just go like this. And then you can see that it's already below, it closed right on the 61.8% retracement right there. Could easily head to 1218.75 right here, and without question. So a pretty choppy, you know, kind of like a reverse head and shoulders in here, right? That failed, but that kind of kept going. And then pretty choppy for Elliott wave right now. We could look at the weekly. Let's see if I did change that to the weekly. well, what's the point? Like, well, we could, you know. So there's the weekly on Google. You know, that's, but go back to the daily. And if we went over here there's the daily, and if we went to the weekly, look at that. It's almost to the top here. This is this bearish week with a red bar, as opposed to this red bar, the first red bar of the bearish week the last time, which was the week of Friday, February 2nd. Now we have, you know, Friday, August 3rd, right here. And if we look at the monthly, see, the monthly, it almost came back, obviously, to the high here. This parabolic movement in here. Let's see if I can open that up. I don't know why I can't. Let's see. No, not going to do that. Not going to reset the price. But anyway, that's the monthly. Well, that's very interesting. So, you know, if we did that here and drew that back, look at the way that is right there. That, you know, this is almost, I could draw this like this, out like that. There's the monthly with the top in here. It could be at a top again. But, you know, if we get above 28.45, we could head to 2,900 and certainly go to 3,000. We could do that too. I'm not outruling that. Certainly could happen. And looking at that on monthly, you see that interesting how these Fibonacci points come right down here. You know, you've got this resistance here, pullback, you know, but as you know, the argument could be made. It's 1, 2, 3, 4, simple 2, simple 2, on the downside here, more of a complex 4, and this fifth wave up here, all the way to here, if that's the high, I mean, that could be seen as that, or, we could make the argument that this is all the third wave, and, pulling back in here, and, this would be the fourth wave and heading higher, into the fifth wave. But we'll see. But it still certainly could head lower in here. But it's interesting to look at this monthly here, then the weekly. Again, this is all in the E-mini. And there you go. And so back to the daily. And yeah, that's the story with that. So if we go back to Amazon, very important stock to keep watching, needless to say. And let me see here. What is that? I don't know what that is. Funny how these signals pop up in Zoom now and then. But anyway, so yeah, that's the story with that. Again, this is, I would say, the bulls have to come out here. And this is it for the bulls. They're starting to give a lot of sell signals across the board here. They have been, for the past several days, if not, the last week. And if the FANGs, here, Amazon, Google, let's look at, tell you what, let's look at Facebook. Look at Facebook. That's the daily on Facebook. It's looking pretty bearish, but, there are a lot of fundamental reasons, several fundamental reasons why that's the case too, of course. But, if we drew, these retracements in here, look at that. So, hanging around the 50% retracement right in here. And here we have a 1, 2, 3, 4, 5 on the way up. So then it crashed here, and certainly could be headed lower, needless to say. And if we looked at, let's look at Apple. How can we not look at Apple? I mean, so Apple has been, what else can I say? Let's go back. Well, yeah, Apple, I would say, just to go back here for 1 second, the 17, this area, just be cautious, that's all. Look at Apple. Apple, started from here all the way down to here. Look at the way this is like waffling around here, the support level in here. And then if we went and we, took this and really looked at this too, you find all the support area right in here at 193.43, then this spike up on all the news, and it's waffling around in here. And it really has been the outstanding leader, hasn't it, for many days in a row after having lagged for many months. Look at it, it's all lagging around in here. And this may be the start of a big leg up, or it could be the last blow off. Let's face it. Spikes before reversing down hard. So we have to be aware of that. So far, it seems to be getting more bullish support, and it could stay up for 2 to 3 months. So it should be watched daily. It really should be watched daily. Very, very important stock to watch. It's hesitating at the midpoint. It's hesitating here at the midpoint near 209. But it could go to 222. Could head higher into here. Could head into here easily. But I would say that if it goes down to 195 again, if it comes down here again, it's likely to give a long-term sell signal. So Apple needs to be watched daily. It really does. And let's see. I'll tell you what. Let's look at. Let's look at Netflix. Netflix. If we look at this, now it's important to be looking at all these stocks because obviously they're affecting the indexes. So if you're trading the SPX or you're trading the road trip trade with on the indexes, you've got to be aware of these stocks. These obviously, for obvious reasons, needless to say, they affect the indexes. So here, look at this. This is that's just a mild statement, huh? It's so obvious, but nevertheless, so I started here, and if I go back here, look at these retracements in here. We can have some fun with this and also, maybe add, we could add the composite index. Let's see. See if it'll get, look at the composite index. That's from Connie Brown, somebody who I studied with for a while. But nevertheless, and they used to use her books for the CMT, but they don't any longer. It's curling over here. Let's see, what else can I give you? Let's see, the derivative oscillator. Yeah, that's interesting sometimes. Let's see. Yep. Well, it's, it's not up that high. This is heading over. This is heading over in here. So look at that. So it's hanging around, the 618 right in here, Netflix, if you will. It's testing, could be tested, certainly testing this area in here. Excuse me, the 333 support area. Could be building a bigger base again. If it was to advance again, right in here. But this chart, I like looking at this because this is the worst of the group of FANGs and failed at a massive resistance zone. And it's likely to fail at a lower top, you know, it could continue to fail. If it did, it could be making a busted parabolic move down, and if so, it could collapse. I mean, this could collapse to 180. I mean, the worst case scenario, all the way back down here. Let's face it, you know. It is the worst of the bunch. This is curling over here. This is doing this. You know what? Let's go back. I don't know what happened to this. Let's see something here. If I could do this again. Let's see if I can find that. Let's see. No. Yeah. Mm-hmm. No, it's a nuisance to find that. So just leave that out. Forget that. So, yeah. All right. So let's go back and go over to, yeah. So that's the story with Netflix. So that's to be watched too. It's right around this last 61.8 retracement area right in here. Again, it could, you know, 2880 to 300. There's some support also, but you know, it's late in the game, and now that they, you know, own the space, they're starting to see major competition by all the other studios. And Netflix's bet, you know, on original content could be costly if subscribers don't show up in bigger numbers. That's their issue, fundamentally. Just amazing to think that this stock was, you know, $7 6 years ago. So there's a lot of potential profit taking on any missteps in here. I would say that. Let's just look at, we'll look at Twitter for a second. Wow, look at that. So if we looked at this, let's see in here. Let's see. Come back over here. Retracements. Brought this down to here. Wow. It's at the 50% level. Look at that, the way that collapsed and went down. Now that's looking bearish. So it suggested a dramatic straight up move into the 40s. I mean, you know, look at that for sure. And it took place obviously, and now we have a plunge back to support on negative talk about peak earnings and their controversial political stands. Even so, the chart pattern suggests good support in here, and the fold back seems still operative. You know, this fold back into here and over into here, with the recent gap down equal and opposite to the gap back in 2015. If we went back there and looked at that. Wow, look at 2015. After basing, you know, that fold back goes back up to the top and potentially higher, you know, if say Trump doesn't give up tweeting. Huh. Imagine if Trump gave up tweeting, huh? I don't think so. I don't know. Maybe they'll force him. Below $28, on the other hand, it's toast. You know? I mean, look at this. I mean, if it goes down below 28, it's toast. It'll go all the way back down. Hey, that would make for a nice short, huh? Needless to say. So that's something else to be watched. Twitter. And then if we looked at INTC, well, that's just waffling around. This looks like a big, you know, head and shoulders pattern. Doesn't it? Look at this, like that, you know? It should have gone up, but now obviously it went down. And we drew that. Look at that. It's like right in the 38.2 area. You know, INTC got some negative comments about peak earnings and tariff business slowdowns. course, you should never really listen to that stuff. This is a stock that had a major breakout a decade ago. After a decade of basing, or so not a decade ago, after a decade of basing, and that usually, is a triple, if not a quadruple in price. But we're not seeing that. So, it could break out, but, if the market, again, if the E-mini, gets above 28.45. But there is potential in there, for it to go higher, needless to say. So, if we look at the weekly, let's look at the weekly on this just for a second. Yeah, see, this is just really just hanging around in here. So it could head higher. We've got to see, the E-mini get above 28.45. This is something else that certainly should be watched. So we'll see, on that. So going back to, what we've said about the E-mini, and if we look at this, on the weekly, that's the story. And then if we look again on the monthly, you can see that it's at the high here, needless to say. Going back to the weekly, there's a sell signal there on the weekly, and certainly a sell signal there on the daily. So, in summary, this is it for the bulls. They've got to, come through here and lead us up through 28.45. Caution certainly is warranted below 2,800 on the E-mini when you see that. It's been choppy lately. And if the fangs head down, as we discussed, they all may run for cover. So caution is warranted. Thanks so much for coming, and have a great weekend, or a great day, a great night, and we'll see you the same time, same station next week. I'm going to shut this off now. Let's see.